Hi there, this is Helen Tarrant again from LA. Here with our whole team. Wow, it's massive. Right, welcome to another episode of Commercial Property Roadshow, everyone. You're here with Helen Tarrant, so today I'm actually going to talk to you about a strategy that some people choose to use in residential and how you could apply that in commercial. So this is about some people might want to buy some land or do some land banking or buy some land that may have development potential in the future. At the moment, they're just holding the land until they can realize that gain in the future. So because it's not something that I do, I have invited my business partner here, Stephen, to talk about, who's also, online as Helen Tarrant.
Hey, look, flattery is the greatest form of. Sorry, I got that absolutely wrong. Imitation is the greatest form of flattery.
Oh, I see. And so he's going to actually explain how that strategy works in the residential space, and then I will show you some examples how that would work in the commercial space.
All right.
So Stephen, when you are doing or buying land in the residential space, what are some of the things that come into consideration, and what are some of the holding costs that are associated with it?
All right. Well, the very simple thing, the reason you buy land in the residential space is normally to develop it. So you buy a block of land with the aim of putting a house on it or some townhouses or whatever suits that area. So the aim is you buy a house, buy a block of land for say 200,000. Aim to spend 350 putting a house and gardening and stuff. So you've spent 550,000. And you aim to sell it and make a profit, right? It's a fairly simple metric. The problem is that if you don't do that all fairly succinctly and fairly quickly, the holding costs can end up biting you quite hard. So you can end up in a situation where by the time you're holding it, you've got to have public indemnity insurance, you've got to pay your council rates, water rates, land tax, and any interest to a bank if you borrowed money on it. So that doesn't seem like a whole lot of money, but it could very quickly add up to $15,000, $20,000 a year, even for a reasonably small block of land. So you've got to make sure you've done your maths very, very carefully, because it can very quickly catch up. And that's one of the downsides in the resi world. And this just happened to me during COVID. I bought some blocks of land down the south coast of New South Wales with the aim of doing exactly this. But the problem is COVID hit, there was no income, and it ended up costing me a huge amount of money because I had several blocks of land in the same company. They aggregated the land tax. And in one particular company, I ended up with like a $35,000 land tax bill. So that's the strategy is very simple. Buy, build, sell. It's not rocket science.
So when you said there was a lot of costs associated with it, so if there was no house being built and you're just holding it, so there is the cost of you pay your rates, is there an insurance as well on vacant block?
Well, if you're just going to buy a block of land and hope that in 10 years' time it's worth a lot more money, well, it probably will be. But you've got to pay public liability insurance, because if someone walks over your block of land and breaks an ankle, they're going to sue you. You've got to pay your council rates. You've got to pay water rates. Now, there's not that much water rates because it's they give you a reduction because it's vacant land, but you still got to pay it. You've got to pay your land tax, and you've got to pay interest to a bank if you borrowed it from someone.
Mm-hmm.
So, with a $200,000 block of dirt could easily cost you nearly probably 5-6% per year.
Okay, all right. So there's some holding costs. I guess the other thing is you could always buy a property with a really old rundown house on it, with the thing that developing it and that, but then you wouldn't be able to get as much rental on it either.
Well, the problem with doing that is you end up with all the same issues that you have when you buy a residential property, but because it's old, they're compounded. So if you buy an old house with the aim that it will just cover your holding costs, even like a vacant block of land where I bought them was $200,000. Even the worst, most horrible house is probably $400,000. And frankly, you wouldn't demolish that and develop it unless you're going to do units. But on a $400,000 property, it's going to be a god awful old house. So you're going to end up with repair bills, and every single thing in that place is going to break, and it's going to cost you money hand over fist. It's not, I've never found it works for me.
Yeah. Okay. So the strategy for some people, if they want to hold land, is really the value of the land might go up over time, but in the meantime, they've got holding costs. So obviously, it's the capital gains thing again. Why you would hold residential is the capital gains at the back end.
But yeah, I mean, look, the statistics are fairly clear, and it's happened in Sydney since 1904. Land, or the value of property in Sydney, doubles roughly every 10 years, and it has since 1904. So if you buy a property for $1 million today, then in roughly 10 years, it'll be worth $2 million. But you've got to get there, right?
Yeah, of course. So I'm about to share with a few of the listeners, if they're interested, just a strategy that we would use here if they were thinking of doing something similar in the commercial space. So I'm just going to share with you just some general properties. These are just not sort of exclusive to what we're doing, and some of them are already under contract. It was basically what I pulled up of Real Commercial. Not specifically looking for any client who is in this strategy, but more just sharing the strategy. So,
so when people want to strategize, they've got something to think about at home.
Yes, that's right.
People are sitting around during lockdown, they go, wow, I've got something to think about.
Yes, absolutely. So this is more, have a look at, so there's a couple of properties. So this one's just in Albury. It's one of the lots. It is already under contract. It's for owner, occupier, or invest. It has have a 5-year lease that started. It's got simple warehouses. It's got 300 square meters. So this is, I would even buy this, if it's a land banking situation, you will buy this as a vacant. So you can see from the outside, it's not a flash property.
No, I've actually seen this property, just FYI.
Oh, you have? That's great.
I've seen this property.
Have you gone inside and have you done an inspection of it?
I have.
Oh, you didn't tell me.
I did tell you. No one listens.
Maybe I didn't listen. Yes.
So what is male who doesn't listen?
Yeah. So tell me about the property then.
Well, for fear of oversimplifying it, it's a ginormous metal shed. And I can't remember the exact numbers, but I think there's 3 tenants in there at the moment. Okay. That's right in one of the corners, that weird-looking shed over the top of the other weird-looking shed. And it was rented out to a company that does air conditioning, industrial air conditioning units. We're at the end closest to where we're looking. Yeah. Right down the far end, it was rented out to a company that does caravans and trailer modifications. And 4-wheel drive modifications, and there was a series of empty spaces in the middle. And this property it looked like it had been reasonably well maintained. Yeah. And it looked like if you got it fully rented out, it could get 8.5% to 9% yield.
Oh, well, fantastic. So for some people, it is really an uplift play on a property like this. So this will be ideal for an uplift property. Absolutely. So I think that, for me, if I was looking at land banking, I'd look at something like that because it's old and run down. I also had a look at a property, this one, which is just a random property, again, picked out of here. It's got 1,200 square meters, but mainly so I can show people the aerial view of it. So that if they weren't to, say, do some land banking or something, buying a property that has like a smaller site coverage or just a small warehouse on it that are being rented out for even next to nothing, having the tenants just covering all of the outgoings is really the idea of it, because this way, covering all the outgoings means that later on, if they wanted to do anything, you can always knock that down and then build. I mean, obviously this is not quite right because it's near the airport, but if you were to buy this in any kind of land, this kind of land thing, they can just build, little tilt slab warehouses.
Absolutely, and that I know where that particular building is too. It's right near the airport, obviously, because it's a hangar. You wouldn't build a hangar near a lake. Well, you could seaplane maybe, but that particular strategy, even if you only had a god awful amount of rent, in some of those older buildings, you're picking up the building for almost land value or not much more, and you could get enough to pay your council rates and insurance and all that sort of fun stuff whilst you're waiting for the value to go up, or whilst you're waiting for your plans to get approved, or whatever you want to do before you do your development.
Well, that's the whole point. Like, this one I've just again picked up randomly at in Port Macquarie, which you haven't been to. For those of you who have not been part of our community, the reason that we actually know Albury quite well is because what are we doing down there, Stephen?
We have a group deal down there.
We have a group deal. We're doing
building a medical centre.
Yes, we're building a medical centre, so we do know the Albury market quite well, and all parts of the land. And this is why Stevens has seen some of this property that I'm showing you. So this property here is just a property in Port Macquarie, and the reason I chose this was because it's going to auction. It's very recent. It's got a large-ish, it's not huge, but it's zoned general industrial, so you can build stuff on it. It's got a floor space, it's got a vacancy, and it's vacant possession. It's got a main building, seems to have very standard mezzanine floor, got a small shed on site as well, and it's got some solar panels. The council rates are about $3,000 per annum, and then you might get some insurance on it. So the whole, if you had a holding cost, this could be 10 grand in outgoings, let's say 10 grand in outgoings, in terms of a little bit of water, the council rates, plus maybe your building insurance. So let's call it 10. Plus, let's say, depending on how much you're buying this building for, you might be up for anywhere, say, $20,000 in this current environment, $25,000 to $30,000 in terms of mortgage, if you're doing interest only, depending on how expensive it is. So let's say that, call it $30,000 to $40,000. You'll have to rent this property out for $30,000 to $40,000 just to hold the property, right? And it's a fairly standard property. I think it used to be probably a boarding house of some sort for pets. And the reason that I think that is because they've got these paw prints on top of it.
That makes sense.
And it seems like not so much up there, but these things in terms of washing, grooming.
That looks like where you park your dog. Yeah,
where you would leave your dog. But I wanted to show people this because it's got an aerial view as well, and then it's got a larger view here. Is like if you're getting some places like in Ballarat or Ararat, or in places like Bendigo or other regional areas in Ipswich or further out, there's areas where there is large, and we see that in Albury as well, very large pieces of land with a small shed on it, and that's what we're ideally looking for. This has the land definitely can be larger. If we're looking at the land banking, I would go for larger land, maybe twice the size of land, but the same size building. And I think, I just wanted to show people what the layout of something like this would be, so they get an idea. But I definitely think it used to be a boarding house for animals.
Well, if not, it could have been a childcare centre with the cages up there.
Sure.
Maybe not.
Very kids friendly. So for me, really, it's about how people can have this, how the strategy actually works for them, and what they and long-term wise, what is sort of, if they were going to use that for residential, they might as well in the commercial space be buying an old shed on a large piece of land in an area that is industrial zoned, or if that's where they want to be, or they could be buying something if it's retail office, if that's what they want. But mainly, most people buying land stuff are going to be in industrial, and in a regional industrial area. So maybe in a Maitland or a Singleton or somewhere that is an Albury or a Wodonga, areas like that. And they just have a small shed, they can just hold it. I think one of the major things I looked at was when I was traveling through to Ararat, and there was I think 3,000 or 5,000 square meter land, and there was a shed on it that was rented out for, I think, $1,000 or $2,000 a month. Like, it was just the shed itself. It had like one toilet in the back and nothing else to it. It was very old, and most people you would just buy that as a holding cost.
Exactly. Yeah. Exactly, and I think your strategy is very clear, and I look forward to doing it in the future. Instead of holding land that's just costing you money with no possible income, then you buy something with a big block of land, little shed, covers your holding costs, and that makes it a lot easier to go forwards. Because
so when the value of the land goes up, and then you are in a position where you've built more cash flow through commercial property, and you can fund a development, then you can go to the bank and get all your approvals done and start doing the development. And in that sense, it's not costing you to continuously hold it.
Exactly.
Yeah. So anyway, that is just one of the strategies that you can use in residential as you can use in commercial. If this is of interest to you, look out for other videos we're going to be making shortly, all about how resi strategies can be used in commercial with a little tweak, and we can walk you through some case studies as well. But again, if you are looking for building a cash flow rich portfolio, and you're changing from residential to commercial, and you want to be with a company and partner up with a company that actually totally understands what that is like, this is something we definitely specialize in. We're not here to be transactional. We're here to build a portfolio with you. You're part of a community, and we can share with you our education, sharing with you especially our group deals and lots of our events where you get to see other like-minded people, where you can join in, for example, our medical developments, our self-storage deals, all the things that...
Childcare, maybe?
Sorry?
Childcare developments. It looks like you're...
Yeah, definitely. Look, behind me.
One behind you.
Behind me, the one that we've done already. This is the one we've done in Townsville. So it's all about actually coming together and being part of a journey together. So reach out to me, Helen, at Commercial Property Cashflow, or helentarrant.com, or click the link below and booking for a strategy session. So until next time, keep hunting, and I'll see you on the next video. Bye for now, and thank you.
Bye.